Have you ever wondered how to invest in oil and gas? Welcome to the fascinating world of energy investments. While many of us are familiar with stocks and bonds, the oil and gas industry offers a unique avenue for potential financial growth. But as with any investment, knowledge is power. Understanding the ins and outs of the oil and gas industry is critical. It's a sector that not only fuels our homes and cars, but also plays a significant role in the global economy. There are various ways to invest, from buying stocks of big oil companies to purchasing shares in smaller exploration firms, or even owning a piece of an oil well. Each comes with its own set of risks and rewards, requiring careful consideration and strategy. Today we're going to delve into the process of investing in oil and gas, step by step. Stay tuned as we guide you through this complex yet potentially rewarding investment journey. Before diving into the investment process, it's crucial to understand the oil and gas industry. Let's start with the basics. The oil and gas industry, often referred to as the energy sector, is a multifaceted field that's divided into three main segments: upstream, midstream, and downstream. The upstream sector, also known as exploration and production, is where it all begins. This involves the search for underwater and underground natural gas fields or crude oil fields, and the drilling of exploration wells. It's a high-risk, high-reward endeavor. The midstream sector, on the other hand, involves the transportation, storage, and wholesale marketing of crude oil, natural gas, or refined products. This might include pipelines, tankers, and storage facilities. It's a critical link that connects the upstream producers to the downstream distributors. And finally, the downstream sector. This is where the refined products reach the end users. It includes oil refineries, petrochemical plants, distribution outlets, and retail establishments. It's where the oil and gas products find their way into our homes, cars, and businesses. But who are the key players in this industry? Well, they range from multinational energy giants like ExxonMobil and Chevron, to independent oil and gas companies, to national oil companies that are often state-owned. Each player has a unique role and influence on the market dynamics. Speaking of market dynamics, they're influenced by a variety of factors such as geopolitical events, natural disasters, technological advances, and market demand. It's a volatile market, with prices often swinging dramatically, which can present both opportunities and challenges for investors. Understanding these basics gives us a clearer picture of the industry's landscape, its operations, and the driving forces behind it. It's a complex field with high stakes and high potential. It's an industry that powers our world and fuels our economies. Now that we've got a grasp on the industry, let's move on to the different ways to invest in it. There are several ways to get involved in oil and gas investments. First up, stocks. Buying stocks in oil and gas companies is perhaps the most common and straightforward method of investment. It's as simple as purchasing shares of companies in the industry. You could choose to invest in large multinational corporations or smaller, more specialized companies. The upside? You can earn dividends and potentially profit from share price increases. The downside? Your investment is tied to the company's performance, which can be affected by numerous factors beyond oil and gas prices. Next, exchange-traded funds or ETFs. These are investment funds traded on stock exchanges, much like individual stocks. An oil or gas ETF allows you to invest in a broad segment of the industry without having to pick individual stocks. This can provide diversity, reducing the risk of being tied to one company's fortunes. But remember, ETFs also come with management fees, and their performance is still closely tied to the sector as a whole. Third on the list, futures contracts. These are agreements to buy or sell oil or gas at a predetermined price at a specific future date. It's a more advanced way to invest, and it can be quite profitable if you correctly predict future price movements. However, it's also high risk. The value of futures contracts can fluctuate wildly, and if you're on the wrong side of that swing, losses can be substantial. Finally, direct investments. This involves directly owning a piece of an oil or gas well. While this can potentially bring significant returns if a well is productive, it's also the most risky and complex way to invest. It requires a good understanding of the industry and often a substantial upfront investment. Knowing these options is the first step to making a sound investment. Next, we need to understand the risks involved. Like any investment, oil and gas come with their own set of risks and rewards. This is a fundamental truth in the world of finance, and it's particularly important when considering an investment in the energy sector. Let's start with the potential risks. First off, the oil and gas industry is notoriously volatile. Prices can fluctuate wildly based on a multitude of factors, from geopolitical events to changes in technology. For example, tensions in the Middle East or a new drilling technique can cause significant price swings. This volatility can create uncertainty and potentially lead to losses. Secondly, there's the risk of regulatory changes. Governments around the world are increasing their focus on climate change, leading to stricter regulations on fossil fuels. These changes can impact the profitability of oil and gas companies, and hence, your investments. Lastly, there's the risk of oversupply. With the advent of new extraction methods such as fracking, the market can sometimes be flooded with oil and gas, leading to a drop in prices. But it's not all doom and gloom. There are also significant potential rewards that come with investing in oil and gas. Firstly, when the conditions are right, oil and gas investments can be highly profitable. In periods of high demand and rising prices, these investments can provide substantial returns. Secondly, investing in oil and gas can provide a hedge against inflation. As the cost of living increases, so too does the price of oil and gas, making these investments a good way to protect your wealth. Lastly, there's the potential for dividends. Many oil and gas companies offer regular dividend payments to their investors, providing a steady income stream in addition to any capital gains. It's important to remember that these risks and rewards are not mutually exclusive. They coexist, and balancing them is crucial to successful investing. It's about understanding the potential pitfalls and rewards, and making informed decisions based on this knowledge. Risk management is key in any investment. Now let's talk about how to actually start investing. Investing in oil and gas isn't as daunting as it might seem. The journey to becoming an energy investor can be as smooth as sailing on a calm sea given the right guidance. So let's take a walk through the process of investing in oil and gas step by step. Firstly, you need to choose your preferred investment option. There are many routes to choose from. You could directly purchase stocks of oil and gas companies, or you might opt for exchange-traded funds and mutual funds that focus on the energy sector. Other options include investing in futures contracts or buying into a master limited partnership. Each of these options comes with its own unique set of benefits and risks, so it's critical to understand what each entails. Now, once you've decided on the type of investment, the next step is to identify potential investment targets. This could be a multinational corporation, a smaller independent company, or even a specific commodity index. When selecting a target, consider factors such as the company's performance history, its financial health, and the overall market conditions. For commodity indices, look at trends in supply and demand, geopolitical factors, and any other elements that might influence prices. The third step, and perhaps the most vital one, is to conduct thorough research and due diligence. Dig deep into the company's financials, explore its management team, and examine its business strategy. For commodities, study market trends and forecasts. Remember, the more you know, the better your chances of making a sound investment decision. Finally, it's time to make your purchase. You can do this through a brokerage account. The process is as simple as placing an order for the number of shares or contracts you want to buy. Once the order is filled, congratulations. You are now an oil and gas investor. And there you have it, a step-by-step guide to investing in oil and gas. Just remember, investing is a marathon, not a sprint. It requires patience, diligence, and a willingness to learn. Happy investing? Investing in oil and gas can be a rewarding venture with the right knowledge and strategy. We've journeyed together through the inner workings of the oil and gas industry, explored the various avenues for investment, and weighed the risks and rewards. In this rapidly evolving landscape, being equipped with a thorough understanding of the industry is invaluable. Remember, knowing the risks is just as crucial as knowing the potential rewards. Investing isn't a game of chance. It's a strategic move. It's about doing your research, making informed decisions, and sometimes, taking calculated risks. This journey is not without its challenges, but with the right strategy, the destination can be extremely rewarding. So whether you're a seasoned investor or a beginner, the world of oil and gas investment is waiting for you to make your mark. If you found this video helpful, don't forget to like, share, and subscribe for more investment tips and strategies. Thanks for watching. The information provided in this video or communication is for informational and educational purposes only. It is not intended as and should not be considered financial, investment, legal, or tax advice. The content is based on general principles and may not be applicable to your specific financial situation or needs. Always consult with a qualified financial advisor, accountant, attorney, or other professional before making any financial decisions or taking any actions related to your finances. Any investments or financial decisions you make are solely your responsibility. Past performance is not indicative of future results, and there are no guarantees of any specific outcomes or returns. While every effort has been made to ensure the accuracy and completeness of the information provided, we do not warrant or guarantee its accuracy, reliability, or suitability for your individual circumstances. We do not endorse or promote any specific investment products, services, or strategies mentioned in this video or communication. Any references to such products, services, or strategies are for illustrative purposes only, and do not constitute a recommendation or endorsement. You should conduct your own research and due diligence before making any financial decisions. In summary, this video or communication is not financial advice, and you should not rely on it as such. It is essential to seek professional advice tailored to your specific financial situation and goals before making any financial decisions or taking any actions.